Okay, Tesla, I see. They just cut prices in China for the Model Y, which is interesting, and I even thought quite unexpected, or not expected at the very least, in the near term, but it has officially happened. Prices just got cut in China, and Tesla stock is not too happy about it. Tesla stock at the time of recording this video is down 1.64% at $238.68 per share. I happen to have $239.97 in the brokerage account, so we'll see if Robinhood in this brokerage account, at the very least, see if it'll let us buy a share. I'll top ticket. I'll do 239. I don't know. I've never tried to trade in overnight trading. I don't know if it'll fill or venue. It filled me at 238.75. Guys, this is free money heading into 2024. You got to take advantage of that anytime you can. Now, we got to get to work tomorrow buying some more. That's obvious. But let's go ahead and get into some of the latest news that is coming out of China. As I said in the last video, I'm literally going broke buying Tesla stock, and the fact I only had $239 in my portfolio kind of tells the whole story, or at least in buying power. Now, okay, so Tesla just cut prices in China. I stated in one of the last videos, based on the inventory numbers that we were seeing, I did not expect this to happen anytime soon. Apparently, I was wrong. This is the chart that I was showing in the video that came out yesterday on Sunday. These are the inventory numbers for the Model 3, Model Y, Model S, and Model X. And yeah, the Model Y is a little elevated, but as a whole, it's nothing too extreme. It's nothing compared to what we even seen back in May, right? There's less inventory today than what you've seen back in May. Currently, there's 2,640 Model Ys that are in inventory. This is down 15% from last quarter and down 47.8% from last quarter on the Model 3. Now, the Model 3 makes a little bit more sense because we're about to get the Highland, and it doesn't make sense for Tesla to be producing a lot of Model 3s right now. They're really retooling their factory. And even some of the news we covered earlier in the day today, well, technically yesterday, well, China just produced the most Model Ys, or the second highest number of Model Ys for any month ever last month. So I guess to some extent, considering Tesla Shanghai produced so many Model Ys, maybe to give some discounts makes a little bit more sense, or maybe we should have had a little bit more of an insight to that. But nonetheless, Tesla stock is not too happy. So Tesla cuts the prices of the Chinese top-end Model Ys in the latest salvo. This is the headline from Yahoo Finance. Says Tesla Inc. has cut the price of its two higher-end Model Y vehicles in China by 14,000 yuan, 1,900 in the latest salvo in a bruising price war. The electric vehicle maker cut the prices of its Model Y long range and performance to 299,900 yuan and 349,900 yuan respectively. The company announced on Weibo the Model Y forms part of the stable of prices together with the Model 3, which are the best sellers for Elon Musk's company. The latest cuts come after Tesla last year triggered a price war in China that left rivals with little choice to follow suit. Prices of the Model Y Performance peaked at 417,900 and 394,900 for the long-range version. Tesla's newest cut means a new all-time low for the higher-end Model Ys sold in China. You're also getting a discount on the Model 3 rear-wheel drive vehicles, and was also extended until the end of the month. And this is a 8,000 yuan insurance subsidy that's being handed out for purchases of the Model 3. This is expected to end by the end of September. September 30th looks to be the last day of this particular subsidy. Now, what you're seeing happening currently in China, as far as China's economy, does not look pretty. And it could get worse from here. And you guys need to be fully aware of that. Now, we'll talk about this briefly because I think it's important to understand as a Tesla investor. But I also want to talk about the implications for Tesla stock because ultimately that's what you guys care about. You don't care if Tesla cuts prices. If it was good for Tesla stock, cut prices all you want. Unfortunately, the markets don't like when Tesla has recently cut prices, but Tesla is far different from any other automaker. Also important to distinguish. News that broke just a couple of days ago is showing China's exports year over year are basically falling off of a cliff. Now, this is a 5-year chart. Notice on this chart, you don't see sequential declines all too often. So China's exports that just came out on August 8th was expected to fall 12.5%. You actually fell 14.5%. Over the last 5 years, you have not seen, well, technically you did right here, see 3 back-to-back declines of exports. But you're doing it and hitting fresh new lows almost for the last 5 years. Now, if you pull this chart up on a max chart, China's basically been in a recession every time you've seen this many export numbers coming in negative year over year. This is typically uncommon from China. Now, same thing is true with the imports. This is a 10-year chart. And it's been negative recently. In the beginning of 2023, it kind of bounced up right at the start of the opening for China. And ever since really one good report, one good data reading, it's been very, very negative. China is not doing so well. The Chinese economy has fallen into deflation. Deflation is what caused the Japanese stock market to peak out in 1989 and never recover ever since. The Japanese market has not hit a new all-time high in about 40 years. This is because deflation. Deflation is a massive problem. Well, China is seeing deflation. China's consumer price index fell 0.3% year on year in July. And this news just came out on August 9th. And year over year, CPI, consumer price index, was down 4.4% in July. What deflation really means is people are cutting prices. So it's not too uncommon or out of the ordinary for Tesla to be cutting prices in China. And Tesla mainly has been cutting prices in China. They've cut prices in the US and Europe a little bit, but a lot of the price cuts you've actually seen have been in China. And considering the state of China's economy, this is not so good. Now, to Tesla's benefit, China, although it's not as big of an economy per GDP as America, they're getting pretty close. They're only a couple trillion off of us, but China has a lot of people out there, right? So it might be a little bit easier to sell vehicles in China during a Chinese recession than it is for the US. A little bit. It's still pretty comparable, pretty similar sized economies in the grand scope of things. I believe our economy is around 21 trillion. Theirs is almost 19 trillion. Pretty comparable here, okay? So I wouldn't worry as much about China unless the situation gets worse from here. And that's a possibility. From January to May of 2023, the Model Y sold a total of 152,461 units in China's domestic market. That's up 87% year over year, which is quite impressive considering that the Model Y is a premium all-electric crossover with a lot of legitimate competition from local rivals. The Model Y is still up 87% year over year. And the numbers even look better today because you really haven't seen that demand slow down for Tesla yet. Some people argue that Tesla cutting prices shows they have a demand problem. I don't necessarily think that's the case. I think Tesla looks at it exactly how they say, right? If they cut prices, they'll sell more vehicles, they'll sell more software, they'll make more bottom line profits. I don't think Elon is the guy that's going to make a bad business decision by deciding to do a little discount on the higher end Model Y variants, right? I have confidence that Elon knows what he's doing at this point. Okay, so while the markets freak out about this is really a golden opportunity, but this could have a broader effect on the markets, because what this says maybe to some of the bears this is what they're going to say coming tomorrow. So just be ready for all the clips from the bears on what they have to say regarding Tesla and the price cuts. Just forewarned, you're going to hear some bears tomorrow. They're going to sit here and say, this means the Chinese economy is not doing well, and that Tesla is going to fail, and their growth is going to slow down, and it's going to go negative, and they're going to have to keep cutting prices. That's not exactly the case. The size of this price cut being $1,900 does not look like a huge haircut, like they have a massive demand problem for their higher end models. After all, if the Chinese economy was going into a recession, which it looks like it is, looks like Europe's already in a recession, well, your higher end models, they're not going to sell as much as your lower end models. So if you've seen price cuts across the board, especially with your low end models, that's maybe where this has a little bit more significant insight as far as demand with Tesla. This news really couldn't have come at a worse time for Tesla. It's not like the stock is going through a rally right now. You're going through a sell-off, so is the broader markets. So this news really comes at a bad point, especially on a technical basis. Tesla stock closed on Friday at $241.90 per share. It was down almost 1.5% on Friday, including the move in after hours. Well, 240 is a major support level. So I want you guys to know, when Tesla stock does start seeing some big movements here, the next trading session, if the stock craters under 240 and it does not get that bounce to 240 and holds that support, which is very possible, the markets could brush this off and Tesla stock could bounce. If it does not, then we have a little bit deeper of a problem. The next support level is around this 100-day moving average, which is in orange, and that's 220. And then after that, your next support level is around 210. Under that, it's about $200. The 200-day moving average is at $196.50 per share. Now, honestly, a 1.8% down move right now is quite expected. This is not like a huge over-exaggeration. This is not a huge problem, right? It's not like the stock's down 5 or 10%. You're not getting signs from institutional investors. They're dumping out of positions, but it's just one of those more than likely algorithmic trading kind of phenomena where algorithms control about 80 to 90% of all of the trading volume you see on any given day. So if the S&P trades 100 million shares, well, odds are 85 million to 95 million are actually computer trades. So what happens is computers are programmed a certain way. So with Tesla, obviously, when it comes to price cuts, the algorithms are programmed to sell Tesla stock when there's news of price cuts, and vice versa. If Tesla raises prices in the future, that's going to be very good. And the algorithmic trading is going to push the stock higher. Now, we need to see how investors actually feel about this, how institutional investors feel about this. And as of right now, I'm not getting signs that it's going to be a huge sell-off, although that is possible. And if you break under that 240 level and the markets are also weak in the next trading session, that could give you a little bit more of that downside. But again, I still think the same logic stands, even though you're seeing a $2,000 price cut for the Model Y in China, for the higher end Model Y. I should be specific there because there's big differences if you're cutting price on the low end or the high end. But long story short, the same thing still stands. If Tesla falls, the broader markets are going to fall. This is not big enough news to cause Tesla to crash while the markets go higher or don't fall. Odds are everything's going to continue to fall from here. That is what you should expect as an investor in Tesla. So Let me know what you think about this down below in the comment section. I personally don't care. I actually love it because you could buy Tesla at a cheaper price. And I think 2024, as long as we don't get a crazy bad recession, buying Tesla stock today is like the easiest money that is out there, especially with the level of quality and safety that you have with Tesla. Tesla has no debt. Tesla is in a field of the economy that's going to continue to keep growing. Electric vehicles are not a fad. They're not going away, right? Would you rather invest in ICE vehicles, internal combustion engine vehicles, or electric vehicles? Electric vehicles are becoming here. They're becoming mainstream in people's minds. Not quite there yet, but there's a real tailwind towards Tesla's business as a whole, not including energy storage. And hey, even licensing of full self-driving. I was actually doing some calculations on this earlier in the day today. I'm very excited to bring you guys that video. But if Tesla did license out their full self-driving once they do have level 4 to maybe you or I, if you wanted to spend $150 a month to license full self-driving, well, some of those profits could be huge for Tesla. And that's probably a big reason why they're trying to sell as many vehicles as possible. Pretty straightforward. I think Elon knows exactly what he is doing. And if there's anyone I would bet on, it's Elon. Hands down. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns. If you want to make more money, if you want to grow your net worth, if you want to reach financial freedom as quickly as possible, or at the very least, stay up to date with all of the major events that you need to know in real time, every time they happen, we keep you updated. Hit that subscribe button, baby. So that is going to do it for this video. My name is Michael Tyler. Thank you for joining me, and I will see you in the next one.